It's Tuesday, April 6th. It's TheStreet Live. I'm Katherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets today?
Well, look, I am seeing that interest rates are tame. And if interest rates are tame, then the stock market can go higher. Remember, this is entirely about whether the Fed will keep rates low. Because if the Fed will keep rates low, then I think you're going to continue to see money pour into the stock market. I don't want to emphasize too much, but when we had that employment number on Friday, employment numbers are the most important numbers. And that employment numbers show growth without inflation. So we can continue to buy until we get some sort of number that's different or some earnings that are really disappointing, which I don't think we'll have. People will still have a predilection to buy.
So we're starting to learn more about the Archegos story, and specifically we're learning that Credit Suisse will record a $4.7 billion charge from this implosion of this hedge fund. And this information came after Credit Suisse warned of potentially significant losses. But on Twitter, Jim, I got the question that I want to put to you, which is, why did we see Credit Suisse say that they're going to write down such a big loss, but we don't have Goldman Sachs saying the same thing?
Well, because Goldman really was able to get rid of the stock that it got hung on very, very quickly, immediately before the market opened, just a giant series of blocks. And that's the way you have to play it. That's what I learned at Goldman Sachs, is that if you make a mistake, if there's a margin problem, be the first. Be sure you get out. Credit Suisse obviously had a different philosophy. Credit Suisse, I think, was the equivalent, whether they like it or not, of playing the stock market. When you have a margin situation, you never play the stock market. No one in that room should be able to say, you know what, we ought to hold on. Maybe it'll bounce. That's not the point. You got to get out and got to get out fast.
Now, your Real Money column this morning focused on Braveheart, AMC, and GME, which is definitely three interesting topics that you wouldn't necessarily think coincide together. But the interesting question that came to me from it, Jim, that I really want to focus on today is, how can a company's stock be hostage to its own shareholders to do the job that the company can't? What did you mean by that?
Well, I mean, I think that the Wall Street bets people have taken a very aggressive posture against anyone who is in favor of these companies that knows they need cash to be able to do what they want. I mean, they're so seemingly attuned to who owns the stock and why they should not sell that they're missing the entire point, which is that what you want in this case of AMC is the money to be able to buy back debt. And what you want in the case of GME is the money for Ryan Cohen to be able to do what he'd like without hurting the company, not the stock, but the company. But the Wall Street bets people are vicious. They'll come after me with everything. They'll come after me about Bear Stearns and whether I really wanted people to buy it. All I really wanted people to do was keep their money in. If they had money at the account, that they would not be wiped out. That Friday, I suggested that people short Bear Stearns. No one seems to remember that. And when it comes to, there was a bad video I did where I was presupposing what you could do, what people do at hedge funds, and that was with a guy by the name of Aaron Task. And they'll print those a million times. They just continue to run it because their goal of a lot of the people there is to make it so I shut up. But I'm not going to shut up about trying to save these two companies. They're vital. Adam Aaron is a genius. He's doing the right thing by offering stock. That way he can buy back bonds that are very expensive. And then, I mean, Frank Del Rio has to do the same thing for Norwegian Cruise. And then we've got the situation at GME, where I want Ryan Cohen to have $1 billion to be able to reinvent the company. I think it's brilliant. So I'm very pro the stocks. I want them higher. And the methods that these two companies are using, if you believe in Ryan Cohen, you got to be in favor of this. If you believe in Adam Aaron and AMC, you got to be in favor of this. And I am not going to be intimidated by people who don't understand that I'm with them. Maybe they are... Maybe they're not in favor of higher stocks. Maybe they just want to destroy hedge funds. I'm in favor of higher stocks. I don't want to destroy hedge funds. I want to make it so that more people have money. So when you have common ground and they still attack you, there's nothing I can do. I just want to make the stocks go higher. Not make, I mean, I just think they should go higher.
You mentioned Norwegian, and you actually had CEO Frank Del Rio on Mad Money last night, and you've been kind of focusing on cruise line stocks in general for a while now, Jim. Talk to me a little bit about this interview.
Well, I mean, the CDC is keeping ships from sailing in our waters, leaving basically from New York City or Florida. Frank Del Rio, who's the incredibly good CEO of Norwegian Cruise Lines, wants very much to be able to cruise. But the CDC says no, and with a series of very confusing pronouncements, I know I can't understand them. And what Frank Del Rio wants to do is have everyone vaccinated and make it so that it's only 60% capacity and give it a try. There's been 400,000 people that have been on ships since this period started, and this is all ships that are not leaving the United States. And there's been very, very few instances of COVID. I know there's a great controversy on my Twitter files about how I want a vaccinated person. I want people to be vaccinated before they come. And there's a lot of people on Twitter, again, they're probably from the Wall Street Bets people, that say that I'm running some sort of communist jackboot state. But they don't realize is that the city is telling me you can only have a third of the people that you want in. I'm thinking about creative ways to get it so I can have a big customer crowd. And that's because that's what Frank is doing. And I don't think Frank's exercising communism. Misinformed people do make it so that you have to use this venue to straighten things out.
And I think it's fair to say, Jim, that last night in your interview with him, he said that he was deeply disappointed. He didn't really mince words, quite frankly, when it comes to how he feels about this current situation.
But no, it was to me war. I mean, in some ways it was like, okay, you're not going to talk to me. You're not going to tell me what I need to do. I can't ship without you. But I frankly don't know what else to do. I mean, if the crew and the passengers are vaccinated, if they're going at 60%, what is he supposed to do? He has no one will pick up the phone and call him? I mean, doesn't he deserve that? Isn't he doing what's right? I know from my point of view as a restaurateur, he's doing exactly what's right. He's completely complying with what would seem to be reasonable, given the fact that you can go to a casino, a game, and absolutely have every right, even if you're sick. That's what it seems like.
So, Jim, Norwegian today is up nearly 5% to 31.16 a share. I have to ask, based on your conversation with Frank last night and just looking at cruise stocks here with the CDC, do you think that investors should continue to hold on to these names?
Absolutely. I mean, I think these are incredibly well-run companies. I think that when you look at the bookings, they're extraordinary. They're above where they were last year at this time. The companies are ready, and they've changed the filtration. They've got very good systems, maybe the best. They have done everything. If you go follow what Norwegian's doing, done everything right. And I just need to know from the CDC what they're doing wrong. Tell me what they're doing wrong. Tell Frank what they're doing wrong, because I can't figure out what they're doing wrong. I mean, look, if you just think ships are never safe, just say it.
So I want to switch lanes and talk about Apple, which is your mad dash this morning. And this was based on a Cowen and a Morgan Stanley note. You focused specifically on the Katie Huberty note, which the price target was cut, but the service forecast is what you think will help give Apple an upside surprise, correct?
Yes. And look, I think that Katie, who is the best analyst by far on Apple, did basically say they're going to have really good service revenue. But then she's trying to figure out what multiple to put on the service revenue, because others in that peer group have seen multiples compress. So she's just assuming that you should view Apple the same way. Now, obviously, if they have an upside surprise in service revenue, then that changes the dynamic. But I think she's just being, once again, a prudent person, basically saying that while she thinks service revenue is going to go up, people may not want to pay as much for service revenue as before. So therefore, she had to cut her price target. I don't think she is doing anything other than looking at the landscape and saying, you know what? it's going to be really good, but it may end up being not enough.
I do want to dig into that note over on our Action Alerts Plus Daily Rundown show, which we will go to right after this. So to take this opportunity, Jim, let's talk about cryptocurrency. The value of the cryptocurrency market has doubled in the last 2 months, and it's now valued over $2 trillion. I mean, there's still ongoing discussions that you and I have talked about and mentioned, such as, are cryptos like Bitcoin here to stay? And can you actually call them cryptocurrency? All of these different discussions are still being held here, but this market is booming.
Well, I always say I'm not the person on these. I defer to a guy like Pomp. I know there are a lot of people who want me to opine on them. I own Bitcoin personally. My kids own Bitcoin. I think that, again, I'm a stock guy, and I want very much to learn more about Bitcoin. But if there was someone who was a Bitcoin expert and was talking about stocks, I would say, what are you doing? You don't know anything about stocks. But I like, I genuinely like Bitcoin for scarcity, and I'm recommending it as to have it as some part of your portfolio along with gold. But I know that I can make a lot of money if I started pushing Bitcoin, but I don't do that.
So then let's put it back in, Jim, let's put it back in your wheelhouse.
I know that everybody wants me to do it.
No, let's put it back in your wheelhouse. We have this opportunity to.
I'd like to be poor and not take the money from people who want me to endorse it. I endorse it because I like it, but I don't know enough. I just defer to others who do. I don't defer to anyone on stocks. Anyone.
So then let's add in, we've got Goldman Sachs, we've got PayPal, we've got other companies looking at cryptocurrencies seriously.
Right, that's what I like to do. I like
so let's focus on that.
Stocks of companies that have adopted it. I've always said that I think Square is terrific because they're willing to give you a piece of Bitcoin. I think PayPal is a place to focus on Bitcoin. But my limited purview is the companies that are giving you the opportunity, and I favor those over ones that aren't.
On Thursday, Jim, you're going to have your monthly call for Action Alerts Plus, and I want to take this moment to take a step back because some people may not understand what the difference is between your monthly calls and our daily rundown shows, which we host right after this. So can you explain a little bit more of how do you prepare for this monthly call, and how is it different?
Well, first, when I was a hedge fund manager, a lot of people wanted a monthly letter, but I was unwilling to do that because it was too time consuming. So I gave them a quarterly letter. When we started the club, we didn't have letters, and then I gravitated doing letters. Then I gravitated doing letters once a month, like what you would get if you were a rich person in a hedge fund now. And I use these letters in order to be able to educate, explain to people what's going on, explain to people how you should analyze stocks, explain to people what we're doing in the portfolio and why. I always try to come up with a new theme per each monthly meeting. I like to do it very current. I've had a lot of ideas in my head, but I'm not ready to share them yet. That will come tomorrow. But the calls are special. The calls last as long as I think they should. There's no prescribed time. And my goal is to give you good ideas, tell you what I'm thinking, and give you a broader view of the market and what I see happening. No one else does it. Typically, it would be a fund manager that would, but they don't. I don't want your assets. I just want you to understand, and I want you to learn.
And there's one piece of the puzzle that I think that we should highlight, Jim, which is the question aspect. You take in all these member questions each month, and we do this. We hit on them daily on our rundown show, but there's an opportunity here for anyone to ask any question, and they can put it to you and Jeff Marks, who is the senior analyst over on Action Alerts Plus. And to me, that's the part that really stands out because you do this for Mad Money. You make sure that you connect with your audience, but how unique is it?
Well, I don't think anyone's doing this stuff. One of the reasons why I want people to join is I'm offering everything that a hedge fund should offer but doesn't, including transparency, admission of mistakes, talking about why certain things worked. None of that's ever talked about. I do it for the fee of it's not free, but that's okay. I'm giving you far more than anybody would with your money. And I think people should recognize that no one does this. A lot of the people who are, let's say, not professional in terms of taking money to run, and people who are professional take money to run, I love the calls. I change the calls every time. Yes, I think the emails are one of the backbones. There's more than one backbone of this product, and I urge people to sign up because I pour my brain and heart out for the calls, and I will do so again once a month with Jeff Marks, Zepfema backing me up, where we'll talk about our new name, and I'll give you a sense of almost every stock if I can. Really, really trying to make it so that when you're finished listening, you're smarter. Someone the other day was saying, well, Cramer's about touting stocks. And it's like, oh, God, can we stop dredging up or thinking about what I was in 2000 or 2005? I'm here to teach. And those who think I'm not, well, go pound sand. Should I go make more money and not teach? It's not what I want to do. I want to teach.
Well, and you can be taught by Jim Cramer yourself on Thursday, April 8th at 11:30 a.m. live on ActionAlertsPlus.com. With that, Jim, let's head on over to our ActionAlertsPlus.com daily rundown show. We'll see you there. I'm Katherine Ross. See you tomorrow.